When you talk about good liquidity, we have seen a real drop-off in IPOs. It was a really weak year for that, and people have been talking about interest rates needing to come down before they can. Are you seeing that actually as being a reality, that this year is going to be more robust, or are companies realizing that it's better for them to finance themselves in private markets and just sort of do it that way in perpetuity?
I actually think that we have about 85 companies that have filed to go public on Nasdaq. So it means they're ready. They're in the SEC process, and they're just ready for the markets to be open. At the end of the day, it's really all about the investor. Are the investors ready to put risk capital to work? And also, investors predict the future. So if they believe that they're confident that we're not going to have higher rates, and we could and likely will have lower rates over time, then they can underwrite that, right? So they can actually put that into their model. A big unknown has become more known, and then inflation has come down, so the cost of doing business has come down, and that all, I think, gives them more confidence in being able to underwrite risk capital, which means more IPOs. So that's a long way of saying I do believe that there's the opportunity for more IPOs this year.
Do you think we're still struggling to reconcile some of the private market valuations of the last few years?
I think private markets and public markets are always going to have a little bit of a different orientation. I'm going to say it that way. So private investors take big risk, right? They take small bites early on in a company's life, but a lot of them. And the VC community has to kind of bet on the future, and they tend to make 10-year bets. So they're going to have a different view of value than a public investor, right? And so I do have to say, I think the private markets and public markets will never be perfectly synchronized. I think that, private investors are going to bet on a longer-term future, so they might be able to wait longer, be more patient to grow into the valuation they're paying. And public investors want to have more liquid options, and they look a little bit more on what's that valuation going to look like in 2 to 3 to 4 years, not 5 to 10 to 12 years.